Okay. So we are continuing with the exercise of withdrawal and admission. We ended at letter A, where we had to share goodwill and general reserves. So let's move on to letter B. Letter B says, other assets to be valued as follows for the purpose of his retirement. Equipment should be valued at 29,800. Now looking at this equipment, did our equipment increase or decrease in value? Did they gain? Did we make a gain or a loss on revaluation?
Gain.
Huh?
Gain.
It's a gain, right? Our equipment were valued at 24,000 at first, but now we valued them at 29,800. So because it's a gain, our assets increased in our equipment increased in value, so it's a gain. Therefore, we need to do what? We need to debit or credit our capital accounts.
Credit.
We need to credit our capital accounts because it's a gain. So let's see, equipment 29,800 minus 24,000. The increasing of the gain is how much? How much it be gain?
5,800.
So it's 5,800. So our equipment increased with 5,800. So we debit our equipment account. And why do you think we are debiting our equipment account? Because equipment is an asset. Assets increases on the debit side, remember, ne? Now in this case, our assets have increased in value. That's why we have to debit our equipment account to show that it's increasing, it has increased. So we have equipment of 5,800. It has increased with 5,800. And then we share the increase or the gain among the partners. Ne? So by crediting their capital accounts. So capital Tom, how much will Tom get from this gain?
1,657.
1,657. 1,657.
Yes.
Okay.
And
so
14.
remember to round off. We are told that you should round off, ne? Our amount should be rounded off.
Okay.
So 58,000 times 2/7. Then we get 1,500 and 106,657, ne?
Yes.
657. 657. And then how much would we get? With 5,800 times 1/7 is how much?
829.
829.
829. And then we move on to Harry. So Harry account will be credited with how much?
3314.
3314, ne?
Yes.
3,314. Okay. And then we move on to the next one we have inventory, ne? Just give me a minute so I tell this person to call back. Okay. So we are moving on to inventory. So inventory, we are told that it should be revalued to 136,000. Ne? So looking at our carrying amount of inventory and the revalued amount, did our inventory increase or decrease in value?
Decreased.
It decreased, right? Meaning we made a what? Did we make up a gain or a loss?
A loss.
We made a loss. Ne? Inventory is an asset, so we made a loss. And what did we say about our losses? On which side do we record it in the capital accounts of the partners?
Debit side.
On the debit side. Therefore, that's why we will have to debit our capital accounts because it's a loss. Our inventory decreased in value. And when asset inventory is an asset, when assets decrease in value, obviously they decrease on the credit side. That's why we'll have to credit our inventory account. Okay. So we have capital. We said we had to debit our capital accounts. So here we have capital. So what is the loss? What is
24,000.
the amount? The loss is how much?
24,000.
So the loss is 24,000, ne? Okay, so what is Tom's share of the loss? 24,000 times 2/7 will give us how much?
6,857.
6,857.
57.
That is the Tom's share of the loss. And then we move on to capital Dick. What is Dick's share? 24,000 times 1/7 will give us how much?
3,429.
3,429. Okay. So 24,000 times 1/7. Okay. 3,429, yeah, because of the 5, we had to round it off. Okay. And then we move on to Harry. So what is Harry's share? 24,000 times 4/7 will give us how much?
13,714.
13,000?
714.
714. Okay. And then we said we have to credit our inventory because it's decreasing. Inventory account will be credited with 24,000. Are we together? Do we understand?
Yes.
Okay, so we move on to letter D. If there are any questions, are there any questions before we move on to letter D? I mean to letter C. Any questions?
No.
So no questions, right? So
Sorry,
let's,
Sarah.
yes, ma'am.
Sorry.
Mhm.
Can you repeat on inventory?
Inventory
In
we
B,
said,
yes.
inventory we are told that it was revalued at 136,000. Now comparing the two amounts, the carrying amount and the revaluation amount. Carrying amount is 160 and revaluation is 136. Did it increase in value or decrease? It has decreased, right, from 160 to 136. So it has decreased in value, meaning that it's a loss on revaluation. And what did we say about losses? They are debited in the partner's capital account. So the total loss was 24,000. The difference between those two amounts, which is 160,000 minus 136,000, will give us 24,000. So that the total loss on revaluation is 24,000. Therefore, we'll need to divide it among the partners by debiting their capital accounts. So 24,000 times 2/7 will give us Tom's amount, which is 6,857. Then we do the rest of the other two capital accounts. And then we'll have to credit our inventory account. Why? Because our inventory is decreasing. It has decreased in value. And inventory is an asset, and assets decreases on the credit side. Any other question? And did I answer your question, ma'am?
Yes.
Okay. So let's move on to letter C. On the amount calculated as owing to Harry. Now we need to calculate the amount owing to Harry. Half will be paid out immediately, while the other half will be transferred to a loan account. This loan will be repaid over a period of 2 years. So let's quickly calculate. Let's quickly draw up Harry's capital account. Let's quickly draw up Harry's capital. So there are two ways of finding the amount. You can either You can either draw up your capital account, or if you want, you can just you can take your capital balance that is in the statement of financial position, and then you add all credit entries of Harry, and then you less all debit entries of Harry. Then you get your amount. Or you draw up the capital account. So which one do you guys prefer? Should we draw up our Harry's capital account, or do we just calculate without drawing it up? What do you guys prefer?
We can draw up one.
Okay. So let me quickly draw up Harry's capital account. Okay, insert date details folio amount, date details folio amount. Okay, so we are only interested in Harry's capital account, ne? That's why we don't need to draw up Tom's capital and Dick's capital. We are only interested in Harry's capital because he's the one withdrawing. So Harry, capital of Harry. So we have the debit side. Oh my goodness. Details. We have the folio. We have the amount, the date, the credit side, and then the details, the folio, the amount. So this is the capital of Harry, which is just a general ledger. Hope you're all familiar with general ledgers.
Yes.
Okay. Okay, so looking at our financial position, we have capital of Harry of 272,000. So the balance in Harry's account, in Harry's capital was 272,000, my goodness. 272,000. And then the date, you write the date of the withdrawal, which is in this case is 2002 July the 1st. Sorry. July the 1st. Okay. And then we move on. Now we go to our general journal. Remember, we are only interested in Harry. So we record all the information that had to do with Harry in his capital account. So we have a credit entry here of 8,000. So let's go to Harry. We have goodwill here of 8,000. His share was 8,000. And then we go back. General reserves. Harry's general reserve was 32,000. Again, it was a credit entry. So you have general reserves of 32,000 of Harry. Okay. And then we move on. We have equipment. Equipment amount was 3,314. 3,314. So we go back 3,314, which is equipment. Again, it was a credit entry. And then lastly, we have this debit entry, the debit entry. So we go on the debit side. The debit entry was inventory of how much? Of 18,714. 714. So those were the only amounts or recordings that we had. Therefore, we need to balance off our capital account. Balancing of our capital account, you can already tell that the credit side is the biggest. So what let's add up our credit side. How much will we get? What is the balancing figure?
Balancing figure.
How much?
315. 314.
315. 314.
314.
314.
Yes.
So 315, 314 should be recorded on both sides because we are busy balancing 315, 314. Okay. So 315,314 minus 13,714 will give us how much? How much will we get?
301. 301,600.
How much?
301,600.
301,600. So the total amount that we have to pay Harry is 301,600. This is his balance. Do you understand? This is the amount that needs to be paid. Are we together? Do we understand so far?
Yes.
Okay. Now this amount,
Yes.
now this amount that needs to be paid back to Harry, we are told that half of the amount will be paid back to him, but the other half will be transferred to a loan account. Meaning it's like he gives the partnership, he's giving the partnership a loan. Are we together? So now we'll have bank, he needs to be paid. So what is the half? 301,600 divided by 2 will give us how much? How much are we paying?
150,800.
168,800.
150.
800.
150.
Or 150.
Yes.
150, 800
Yes.
will be paid to him, and the other half of 150, 800 will be transferred to loan. So we need to record this. We need to journalize this. So we go on. So we have to debit Harry's, because remember we are paying, we are paying Harry. What is happening to Harry's capital account? If we are paying him his balance, will it increase or decrease? We are paying off his interest. Now, will it increase or decrease? What do you guys think?
His what?
We are paying Harry off, right? So do we need to
Yes.
debit his capital account or credit his capital account if we are paying him off?
Debit.
We need to debit his account. We need to
Yes.
debit Harry's account because we are paying him off. Okay. So we have capital Harry. Capital Harry of 3. What is the amount again? 300 and what?
301.
600. And then we credit our bank. Bank has to decrease, remember? We credit our bank with 150. With 150, 800. And then we credit loan because the other amounts we need to transfer it to the loan account. A loan of 150, 800. Are there any questions?
No.
Why is bank and loan credited? Is it because the partnership is paying him? So
Yes, we are
No.
paying, the partnership is paying him, So if the partnership is paying him, bank is a what? Is an asset. Ne? Asset decreases on the credit side. Our bank is
Yes.
decreasing. And then loan.
Credit side.
Loan is a liability.
Okay.
The loans of the partnerships are increasing. Harry gave a loan to the partnership. Ne? A loan is a liability. Liabilities increases on the credit side. Do we all understand?
Yes, we do.
Okay, great. So we move on. Sorry. So we move on to the next letter. So what is the next thing there? We are told that
D.
Harry's interest will be taken over by the remaining two partners equally. Okay, so let's share Harry's interest. Harry has how much? He has interest of 4/7, right? So the first one, Tom, can even just do it here. If Tom has 2/7, so we need to divide this 4 equally. So 4 divided by 2 will give us 2. So each one will get 2, right? So Tom will have 2 plus 2. 2 plus 2 will give us 4/7. And then with Dick, 1 plus 2 will get 3/7. So their new capital sharing ratio is 4/7 and 3/7. Do we understand?
Yes.
Okay. So we are moving on to admission of a new partner. We are done with withdrawal. We are moving on to number 2, and number 2 is the admission of a new partner. Admission of a new partner. So under admission of a new partner, let's go through the questions. What are they saying? So in order to raise sufficient cash to pay Harry out, Tom and Dick decided to admit Tebesho to the partnership on the same day. For the proposals, for the purposes of Tebesho's admission, the partners agreed as follows. Tebesho must pay 11,760 for goodwill or for his 1.5 shares in the partnership. So he got 1/5 shares in the partnership. Tebesho will contribute a vehicle to the value of 16,000 as well as cash for a total capital contribution. So he contributed a vehicle of 16,000 as well as cash for his total contribution. Ne? And debtors are revalued at 50. Debtors are revalued at 55,400 after the admission of Tebesho. A general reserve of 24,000 should be disclosed in the books of the new partnership. And also goodwill will not appear in the books of the new partnership. So we need to disclose 24,000 of the general reserves in the books of the new partnership. And also we are told that goodwill will not be will not be recorded in the books of the new partnership. So we are asked to journalize the entries based on the admission of Tebesho. So what is the first thing that we do before during the admission of a new partner? What is the first thing that we need to do? What is the first thing that we need to do?
At A, we apportion the goodwill.
Like, okay, how will you apportion the goodwill if you don't have the new profit sharing ratios? So the first thing that we need to do during admission of a new partner, take note of this. The first thing that you need to do during the admission of a new partner, you need to calculate your new profit sharing ratios. You first need to calculate your new profit sharing ratios. And then that's when you can do your journal entries, because you will need the profit sharing ratios to do, why am I deleting this? To do all the necessary entries. So let's calculate our new profit sharing ratios. So we are told that currently Tom has how much? 4/7, right?
Yes.
And then
Yes.
Dick has 3/7. And then you are told that Harry will have both had 1/5 shares. So Harry bought
No.
1/5 of
Partner
the
is
shares.
stable.
Are we together? However, this,
Sarah.
It's
yeah.
not, sir. It's not Harry. It's
Oh,
it's
Tebesho.
Tepeso.
It's
yeah, thank you.
ratio.
The best show. Thank you. Okay. So these are their profit sharing ratios, ne? But the denominators have to be the same. You need to convert them to make sure that the denominators are the same. Okay. So the first thing you are told that if Tebesho, because Tebesho is the most important thing now, currently, because he's the one being admitted. So if Tebesho is taking 1/5 shares, if Tebesho is taking 1/5 shares, what will be remaining? What will be the remaining ratio? It's gonna be 4/5, ne? So the remaining ratio will be 4/5. So we need to share this 4/5 among the other two partners. So we start off with Tom. So Tom is 4/7, and then you multiply with 4/5. Are we together? Do we understand? Tebesho took 1/5 shares in the business. So we are left with 4/5 shares. So these 4/5 shares will be distributed among the two partners, or in other words, they will need to be added to the remaining two partners. So 4/7, you multiply it with 4/5 will give us how much? Tom will have how much?
16/35.
16/35. Okay, and then we move on to Dick. So Dick will have 3/7. You multiply it with 4/5. How much will he have, what will be his new sharing ratio?
12 over 35.
12 over 35. Are we together? Okay. Now, if we say that, okay, Tom now has 16 over 35, 12 over 34, but the ratio is 1 over 5, ne? So we need to convert the shares to make sure that the denominator is the same. Are we together?
Yes.
We need to make sure that the Besho's denominator is also 35, ne? Okay, so I'm quickly going to share, I'm quickly going to stop sharing this. So we do the calculations on the whiteboard. Okay. So if we have 35 and 5. So the lowest common factor of those two is 35, ne? So 35. So we are more interested. We said that we want the denominator to be the same, to be 35 is the same. So we make the denominator 35. And then we know that the ratio is 1 over 5, ne? So 35 divided by 5 will give us how much? It will give us 7. 7, you multiply it with 1 will be 7. Therefore, the ratio will have 7 over 35. Are we together? Do we understand? We only
Yes.
have less than a minute. So once it's in itself, I'll quickly restart it so we continue. So the ratio will have 7 over 5. Okay, let's go back to our okay, so I'll quickly just end this session, then we can restart it.